Well, hi, everyone. Welcome to the Buffett and Beyond Research Stock of the Week. And this is December 6th, 2025. We're almost at the end of the year, folks. We're going over CrowdStrike Holdings, which has been up over 200%, actually 218% over the past 5 years. Not bad. And remember, folks, if you want to live on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And the business, well, CrowdStrike Holdings, which you've probably heard about by now, provides a leading cloud-delivered solution for next-generation endpoint or protection on its Falcon platform. And folks, what it means is it protects you when you're in the cloud up there. And it protects span security markets, including endpoint security, vulnerability management, and threat intelligence. And the U.S. accounted for 70% of revenue in the year just ended, or ending now, and the other large markets are Australia, Germany, India, and the UK. Has about 10,118 employees, and folks, it increased its workforce by about 25% just over the past 7 months or so. So yeah, this company is growing. It's doing better than the other cloud security companies out there, and it's growing, and we're going to see those numbers right now. So we just look at a brief clean surplus return on equity, and we're looking at the average company in here, which is returning about 13.5%, and CrowdStrike at 20.9%. Now, this coming year for 2026, this is projected to be about almost 50%. So yeah, this is the 5-year average, and boy, you can see it is really growing fast. So the key here to this question is, would you rather put money in the bank that's giving you 13.5% return, or into CrowdStrike, which is giving you next year supposedly almost 50% return? Yeah, there's no question there. And when it comes to revenue, we like to look at revenue because you need the revenue to bring it to the bottom line, or else you don't make profits. So with the average stock out there, the average stock in the S&P 500, I should say, 7.1%, CrowdStrike 30.1%. So we're looking at over 4 times the revenue being generated by this company than the average company in the S&P 500. Now, when we look a little closer at the numbers, we can see that, yeah, it had losses back down when it first started and then started gaining. And the past couple of years, these numbers have been raised by about 15 to 20 cents for 2025 and 2026 just over the past 6 months or so. So you can see these numbers here are really going gangbusters because this company is starting to bring in, for the amount of money that's been invested by shareholders in this company, these are the kind of numbers that they're getting, that CrowdStrike is getting, putting all the money it makes back into itself in order to grow. And back here, you can see that over 5 years, the ROE has averaged 20.9%. Over 3 years, up to 36%. And now we're up 62% for 25 and 49%, almost 50% for 2026. So you can see that these average numbers are growing, and that's what the market loves to see. They want to see that not only is the profit growing, but it's growing at an increasing rate or accelerating rate. That's what we like to see. Now, net income growth is all distorted over here by this increase of 4,600%, because back here it went from a negative to a positive. So we kind of disregard this number. We know it's growing. We don't need an exact number there. Revenue growth are the true revenues coming in. So those numbers are not distorted. And you can see that the average is 30%. Next year, expected to grow 20.4%. The revenue, that is, 20.4%. And that's 3 times more than the average stock. Years to pay debt. Buffett's rule of thumb: if a company takes all the money it's making and puts it back into itself in order to pay off the debt that it has, in other words, whatever it makes, it pays off the debt, how long would it take? His rule of thumb is 5 years or less. Our rule of thumb is 3 years or less, and this company can pay off its debt in 6 months. So we don't have to worry about interest rates going up and affecting the debt of this company. It affects a lot of other things, rising interest rates, but it will not affect the debt payments on this company. So that's a very, very good thing. And let's look at the year-to-date. Black line is the S&P 500 down here. Right now, as I'm recording this, up about 16%, which is very good. And this company up 50%. So we're looking at 2.5 times that of the market returns. And we can see, yeah, it looks volatile in here, but it's not as volatile as some of the other stocks that are out there, believe me. And when we look at 5 years, yeah, look over here. When we went through that decline in 2022, and this stock went down more than the averages, not the NASDAQ, but the average of the S&P 500, because the NASDAQ fell 34% in this year. But coming back, this has come up with higher lows and higher highs. And folks, that's really what you want to see in a stock. This is a very, very nice chart. And again, up 218, almost 219%, while the market over 5 years is up 86%. So yeah, this is the kind of stock you want in your portfolio if you want to outperform the S&P 500. And it's in an industry that really needs it. Everybody needs computer security, cloud security, and this is the company that does it for you. So, folks, we had a not-so-good November. We're having a so-so December in here, even with the holidays, but we had a great October. So, anyway, the markets out there are doing pretty good for us. We've got a lot of profits in our portfolios, and some of them are up extremely large, because when you see our ETF portfolios, one of them is up over 70%, and that is, of course, the semiconductor ETF. We pick the top stocks from any ETF, and those are the stocks that we pick rather than buying the entire ETF. Because think about it, an ETF is comprised of above average stocks and below average stocks for that ETF. So we know how, using the clean surplus methodology, of how to pick those above average stocks. CrowdStrike is one of those stocks. So folks, you go out, you have a great weekend, have a great holiday, and most of all, stay safe, and we'll see you right back here in a couple of days.